when we started this conference back 4 years ago, this topic rarely was discussed, but now in the crypto world, RWAs are basically the gold mine. Everyone talks about it because this is the future of crypto, the future of tokenizing everything that could be tokenized, from real estate to stocks to bonds to property and so on. And because of that, one of the panels today will be about the future of real-world assets. The first speaker on this panel is Papuna Lejava, who is the co-founder of Keepz. Papuna spent a lot of years in the National Bank of Georgia as vice president, and is one of the leading speakers in general about this technology. Let's give him a warm welcome. Next speaker is Brandon Smith, who is CCO and lead partner at Decubate Ventures. Brandon, please. Brandon will provide insight from the investor side. If I can see, okay, here is Brandon. Let's give Brandon a warm round of applause, everybody. Please, the mic is there. Take your seat. The next speaker is Guruprasad Venkatesha, who is co-founder and CEO at b-cube.ai. Please give a warm round of applause to the speaker. I don't see energy, guys. It's not that late yet. Come on. And the last speaker for this panel is Faraj Abutalibov, who is founder of Crypto Executives. Let's welcome Faraj to the stage. Please take your seat. And let's welcome the moderator, Rioni, founder at Georgian Crypto Club. She will be moderating this panel. Please, Marina, welcome on stage. Of course. All right, good luck. The floor is yours.
Hello? There we go.
Great. Oh, so much people. Really happy to see you all here. I hope you're enjoying the conference. And we've just started. So welcome to the panel about RWA. I think it's one of the hottest topics in Web3 now. So we'll be talking about tokenization, real-world assets, and unlocking new frontiers. So I think that RWA idea is very simple, but at the same time, it's extremely needed and powerful. How can we bring physical assets like real estate, commodities, or financial instruments on-chain, making them liquid, transparent, and accessible? I will introduce the speakers once again, because it's never enough. So we're having an amazing group of speakers today, which is Brandon Smith, who is CCO and lead partner at Decubate Ventures, launchpad and accelerator for Web3 token projects. Papuna Lejava, who is CTO and founder of Keepz. It's a Georgian fintech company enabling crypto payments and even tax payments in Georgia. It's Guruprasad Venkatesha, who is co-founder and the CEO of b-cube.ai. It's an AI-powered quant trading platform for digital assets. And of course, Faraj Abutalibov, who is founder of Crypto Executives. It is a very big community of top-tier executives in crypto, which I'm dreaming to be a part of. And also, he's co-founder of Crosscurve, which is DeFi liquidity platform. So let's start from the warm-up. It will be a simple question. What excites you most about RWA tokenization, and what is the biggest challenge you see there?
Hey guys, yeah, I'll start if that's good with everyone else. Yeah, so I think a lot of people think or immediately attribute RWA to like commodities, real estate, these kind of things. And I've been following the RWA space for a while. Quite a lot of the clients that we incubate are RWA clients. But in terms of excitement, I've seen more niche kind of financial products or services being tokenized. And when I think about, I'll probably say this quite a lot during today, but when I think about what excites me, it's more about the equity side. So I think there's two industries in the world right now that you have to be a part of, like everybody has to be a part of, which is blockchain and AI. And obviously the equity side is there are like teenagers in their bedroom creating AI startups, incredible products that have no access to any kind of finance, for instance, right? So I personally, I think in, I don't know, a few years, whenever the regulation is there and whenever we can do it properly, imagine being able to find a small AI startup, maybe a few of us here, we come together, and then be able to fundraise safely via equity and instead of bootstrapping the company, pre-IPO, like again, really MVP idea. That to me is probably the most exciting thing about RWA, is that tokenized equity, getting in really early with these companies and really believing in, these startups, because the AI space specifically is moving so incredibly fast. Personally, I want to be a part of that, but at the moment, I can't really be a part of that. I can only invest in publicly listed companies or angel invest if I have the connections. But I'd love to be able to go to an interface and do that and research and do that in a decentralized way where I'm not, open to fraud or scams or anything like that. So yeah.
Yeah, what excites me the most, I'll be a little bit more general than Brandon. So what excites me is the opportunity to make the traditional assets as fast, accessible globally, and efficient as currently are digital currencies and digital money. So I think stable coins have shown that the technology is there and they can be exchanged globally with a matter of seconds. And I think now it's time to move to other types of assets, the real world assets like real estate, bonds, energy, invoices, and so on.
What excites me the most about RWAs is unlocking of trillions of dollars of value on-chain, whether it can be treasuries, commodities, stocks, and IPs, intellectual properties, arts, anything can be tokenized. And so far, many of the treasuries and other kind of assets were accessible only for institutions. But now it is opening up even for the retail users also. So that is a very big thing, because crypto was started as a revolution for the retail users, not just institutions. Now this opens up for everybody, and everything is completely on-chain.
Thanks, guys. Guys, from whoever is in the room, who knows what RWA stands for? Just lift your hand. So I think not lots of hands. So what real-world assets or RWA stands for is basically anything around us that is investable. It could be real estate, it could be bonds, could be stocks, could be anything of value. It could be invoices, could be trade finance, anything, right? So according to BlackRock, this is going to be the next big thing in finance. It's basically tokenization of everything. So you see people having a business, they could tokenize part of that business, sell it elsewhere if they need capital. And this is going to be an interesting, completely new way of how business is done. So what crypto and what blockchain is all about, it's a new type of ownership, Web3. And tokenization allows anything significant of value to be tokenized to the platform, and that part of that business or that part of that share to be sold on the secondary market. So instantly you unlock a lot of users who couldn't participate in the, for example, commercial real estate development, or it could be some pre-IPO deal, or it could be investments in the startups, or it could be investments in the biotech company that does the cancer research, and they could become shareholders of that company. A lot of people and a lot of technologies are already there. It's already developed. We didn't have regulation. So now regulation is coming slowly. First, it started in US from stablecoins, Stablecoin Act, which is Genius Act, and a few other legislatory measures in US, but also tokenization part is also there to understand and defend both investors and those who tokenize assets. And what is the difference? If you invest in the tokenized share, how do you protect yourself? If you invest into a tokenized project in real estate, how do you protect yourself? So all that is being figured out now, but what we are in now, it's a new frontier of the way how we invest and how we live. So BlackRock is saying it's going to be like 15 trillion industry, which is enormous amount in 10, 15 years. So, and we're just starting to do this now.
Great, I think it was the best introduction to RWA. And as Faraj told, you can tokenize everything. You can even tokenize field of cucumbers, I don't know, or real estate, like truly everything. And what I want to ask you, what really counts as a real world asset, and who should verify the ownership before tokenization? The governments, or probably private companies, or blockchain protocols? What do you think?
Yeah, I believe that there should be some kind of regulator, and a lot of decentralization proponents, like Bitcoin maxis or true DeFi maxis, are believing that somehow the DAO will sort out all the problems and will move away scammers from scamming the people.
Do you believe in it?
I do not believe in this completely. So I came from very traditional industry. I was 15 years in oil and gas. I was drilling oil and gas wells for large corporations like BP, ExxonMobil. I moved into crypto industry when I was doing Harvard Business School degree. And after I watched Senate talking about USDT and use stablecoins, USDC as well, how to keep USD as a dollar as a currency of new crypto economy. So a few years later, they're passing legislation where any private entity could issue their own stablecoins, and the stablecoin volume moved to $260 billion, which is larger than any other country currently holds of United States treasuries. So for United States, it's very important, and because United States can impose rules on the entire global banking industry by saying that if you accept dollar, you should accept stablecoins, they're driving this institutionalization forward. So coming back to tokenization, I'm sure that, and I was speaking to a lot through my network with both top guys in crypto and top guys in TradFi, that the merge is happening. TradFi is basically JP Morgan, Goldman Sachs, all the large private institutions. It's BlackRock, Vanguard, all the guys who are holding ETFs. So those are institutions with money. Crypto is technology and a lot of casino type Ponzi's as well. So in a way, the ones with money and the ones that can actually influence political power are TradFi, and they will be adopting the best technology out there. It could be, for example, the platforms for tokenization, and then they will work with governments to have the regulatory bodies. So, for example, in Dubai, I'm based in Dubai. There are like VARA, Virtual Assets Regulatory Authority. In Abu Dhabi, there's ADGM, Abu Dhabi Global Markets. So they have a very pro-regulation approach. So they work very intensively with a lot of companies. They do not ban them and go after them like previous SEC in Gary Gensler. So this will lead to birth of proper like regulatory authority. In, for example, Europe, it's MiCA, but they have like very, very weird sometimes systems. So, for example, like if you have stablecoin, it should be in the bank, and if that bank goes bankrupt, your stablecoin is gone.
Okay, so let it be probably.
Yeah. So, but like answering your question is. For sure, in my opinion, regulator should come and impose those rules.
Yeah, maybe back to the definition of the real world asset, maybe what we call it in this room, right? So I think it's any asset with a tangible value off chain can be considered as a real world asset. And how it should be verified, I would say it should be a combination of traditional channels and the DLT technologies. So it should start probably with the traditional authorities like the registry or the regulator who can start verifying the asset. But the proof itself should have a separate life, and it should live on chain so that it's accessible by anybody and verifiable by anybody in the world.
Great. Guruprasad, Brandon, anything to add?
Yeah, real world assets for me is something that our grandmothers will understand. If we say to them like we have 10 Bitcoins, 10 Ethereum, they don't get it. But if we say like we have 3 apartments, we have gold, we have silver, we have government papers, treasuries, they truly understand that. So that's what I classify as real-world assets. We can call it as bonds, real estate, anything that has tangible value in real life. What was the second part of the question? Like who has to verify it, right? Okay, thank you. I think there should be 3 levels of verification, in my opinion. The first one should be the regulator for legitimacy, and private companies for efficiency. And the third one should be the blockchain, which has that transparency layer. So it's very important to have legitimacy, efficiency, and transparency. So I think if we have all these 3 things, then the whole industry, what we call as RWA, will have a lot of trust.
Great, thank you. Brandon, want to add anything?
It's always hard going last because you all gave great answers. I just reiterate that, right? I think anything that can be tangible value is a good way of putting it for sure. Because also, like, it doesn't necessarily have to be monetary value as well. Maybe a field of cucumbers is not very valuable, but it's valuable to us. Maybe it is, I'm not sure. I actually met a company that was doing, if anybody knows the durian fruit in Southeast Asia, it's like the really, really smelly fruit. They ban it in restaurants and whatnot. I met somebody that was tokenizing durian farms. Maybe it's a big market. I don't know, I'm not sure. Probably is actually a big market. But so yeah, tangible assets for sure. In terms of the verifying, I think a combination of traditional regulatory bodies, like you mentioned, but then also private companies for the efficiency side. I've never thought about the blockchains themselves. I think that's a really, really good insight. Obviously now we have a lot more private blockchains. Pretty much all the TradFi guys are developing their own blockchain as well. So that's not as open door policy essentially. Nothing else to add there.
Great, thank you. And the next question I want to address to Papuna, because I think he's the one who knows better how things go in Georgia. And since we're here, I want to ask you, what is the opportunities and challenges in Georgia for RWA tokenization? Because regulation is a huge barrier globally, but as I know, Georgia is very good in it, in crypto, and even the government uses blockchain technologies. Could Georgia become a hub in which sectors like real estate, energy, fintech can be succeeded in RWA?
I'll try to answer combining my previous life as a central bank regulator as well as current role. So Georgia, I think it's uniquely positioned because it's a small country and it's a quickly developing country, and it's on the crossroads of Asia and Europe. So it has a geographic strategic location, but at the stage of the development is also quite interesting because we don't have a lot of legacy systems and infrastructures. And given that the regulator, the central bank, is quite progressive, they're open to the new technologies on one hand, and on the other hand, we have financial sector that is very adaptive to the new technologies. I think this positions Georgia very uniquely. So what are the opportunities for tokenization? I would say maybe 2-3 areas. One, the real estate tokenization. And we've seen on a sample level, I would say, some examples of this in Georgia because the registry already holds the proof of ownership in the blockchain. The second, I would say, the bond markets. This is the opportunity because it will give the Georgian bond market more liquidity and also the opportunity for regular people, not only the banks and financial institutions, but anybody to invest in the fractions of the government's bonds. And third, of course, probably the most important is the fintech. That's the area I represent. And here, I think opportunity lies in the cross-border trade, remittances. For Georgia, I would say these three areas. In terms of the challenges, probably we should get the legal and regulatory aspect really right because this is new. There are no best practices in the world that Georgia can rely on. Here, really, the authorities have to innovate. But if we get this regulation right, where institutions can trust the real-world asset, make it enforceable, and so on, I think Georgia really has the opportunity to become a hub connecting Europe and Central Asia through Caucasus.
Yeah, great. I really believe in it, and I think Georgia really can. And it will be in the nearest time. We'll see first great examples of this. And the second question I want to ask Faraj. So what do you think, how you see the role of smaller countries and emerging markets like Georgia in the global RWA system? What kind of international standards or cross-chain solutions are needed to make sure these markets are not isolated, but actually connected to global liquidity and adoption?
I think for Georgia in general, like any small country, they have like easier access to, they can experiment a lot, and if they are experimenting, they can attract a lot of companies to come and have their headquarters. For example, Tether, one of the largest stablecoin issuers, they have the regional headquarters in Georgia, which I believe could be the attraction point for the entire Caucasus or maybe even the Central Asia. And if regulatory work will be done in a nice way, for example, taking the best from Dubai or UAE or some aspects of MiCA, adopting them, making it a law, making it easy for companies to come and set up bases, set up crypto exchanges, which in my opinion are probably the institutions of the entire industry because they have capital, they can invest. They also are a way to create an exchange to trade those assets. They have also very strong media presence, PR partners, the conferences, a lot of sponsorship comes from those. A lot of things that in traditional finance is occupied by PR, by agencies like Moody's, by proper media institutions like Bloomberg. It just doesn't exist in crypto. So, and if those institutions will select Georgia as their regional base, it's going to be very good for country overall. With regards to cross-border and cross-chain payments, I believe that it's very hard to attract any DeFi protocols in some space. I mean, like, for example, UAE, by being the hub, by being making it easy, bringing a lot of headquarters from for exchanges, they also attract a lot of VCs, a lot of funds, a lot of hedge funds. The hedge fund and finance industry already was considering, was there, like a lot of family offices are there. So that actually creates a network effect when everyone wants to be there. US is changing the direction completely, 180 degrees from being prosecution driven to now being very open. A lot of companies are like considering going there. So I believe that in general, if Georgia will play its cards, I think it can become the Central Asian hub very soon.
Great news. I hope it will be. Do you have, guys, anything to add? Or to probably discuss?
I think the biggest problem that tokenization faces, especially now moving into security tokens, is the geopolitical side of it, right? So I think, yeah, the US obviously does. They don't set the standards, but obviously they influence the macro market globally on all asset classes and regulation. I think the opportunity for a country like Georgia, and we're seeing it also in the Middle East as well. Faraj, you're in Dubai, you know this. Are the more forward-thinking bodies. So as an example, like you mentioned before as well, the Georgia are putting the land registry on chain, right? I didn't know that. That's like it shows that it's kind of like a forward-thinking government or regulatory body. I think the countries that adopt this are obviously going to benefit early. It's going to be like a liquidity race for this. Same in Dubai. Like you guys probably know Dubai's main financial asset is its real estate, right? So they're doing a lot. They're running out the DLD, which is the Dubai Land Department. They're rolling out the sandbox for fully fractionalized land registry on chain, which means all of us in this room, like I don't know, like maybe 500 of us in this room could all own a part of a property and it not go through an SPV, not go through like a shell company, and it's fully on chain. So there is going to be a lot of opportunity for the countries that do have this forward-thinking mindset. But I'm British, and for instance, if we talk about the UK, although they say that they are very interested in being like a front runner in this kind of policy, it's the opposite. Let's be honest. So I think that's the problem. And then when you bring those asset classes across borders, so not stable coins, not remittance, but accessing liquidity globally, that's going to be the biggest bottleneck for these countries, right? Is like, again, on the regulation side. So, yeah, that's my take.
So there is also one technical issue here with the real-world assets that most of the real-world assets that we are talking about, like carbon credits and several other things, they don't have an oracle yet. So someone has to build these oracles. So if there is no oracles, then they cannot be used as collaterals. They cannot be traded. And also there will be a challenge between how we bring the value of the real asset to the token that is tradable. So there needs to be some kind of legal tech bridge between these two things so that the actual value of an asset is reflected in the token without getting broken. So it always goes back to the same point of oracles. So I haven't seen any oracles for carbon credits because we are building an on-chain perpetual DEX for real-world assets. So we wanted to list carbon credits, but there is no oracle provider for carbon credits as of now. So this is also one of the problems. And even if oracle comes, we have to see the latency of the oracle and how reliable is the oracle. If it breaks down somewhere in between, then we don't get the real-time feeds. We don't know the real-time prices. Then we will be lost. Like crypto or other stocks or commodities, like they have several oracles. So one oracle fails, we have something else to back up. So if Binance is failing in giving us the prices, we can take from Bybit, we can take from several other exchanges. But when it comes to very niche asset classes like arts and intellectual property, we need to have a very robust oracle system. And I haven't seen such a oracle system yet, and some of them don't even exist as of today. So I think like many things are looking very good on paper, but in practicality, it's going to take a long time.
Yeah, everything takes time, and it's quite difficult to make, but I really do believe in RWA. So my next question was, looking in around 3-5 years, which RWA use cases will drive most the mass adoption? And how can we solve the liquidity problem and make these tokens be actually traded? Any thoughts?
I just want to say the Oracle point that you made was absolutely spot on, because I don't know about you guys, but when I first got into crypto a very long time ago, I think we've all made this mistake. We've sold a token or a cryptocurrency, and we've been hit with slippage. And it says you're getting this much, and then you look in your wallet, and it's this much, right? Everybody's made this mistake. If you haven't, then fair play. That issue that my friend mentioned is going to be a big problem on the Oracle side as well. Obviously, traditional markets, they have, I mean, the infrastructure around providing low latency price feeds is I mean, I can't imagine the type of size of that business. But then when you talk about these niche assets, that becomes a massive problem. So, and then bridging that point onto your question around what is the biggest opportunity. So I mentioned earlier, like tokenized equities, 100%. I think if there is a safe way to do this, it's kind of like Kickstarter or Indiegogo. If you guys have ever done like the traditional Web2 equity raise, they cornered the market. It's like doing that, but for any company, no matter what the size, in like a semi-permissionless way. That's really exciting. And then outside of that, so I don't sound like a broken record, I would say at the same time, I don't think I'm like a massive decentralization maxi, right? Like I understand, like as Faraj said, true decentralization, it doesn't necessarily work in the way that we want it to work. However, I do like the narrative of being able to open the closed doors that were once locked to institutions. I'll give you an example. I've got a few RWA clients. That's why I'm here speaking today, right? Because I like this topic a lot. Two of my clients, one is green energy finance. So this client is essentially being the bridge of liquidity to developers that are putting up solar farms, wind farms, hydro dams, all of these things. Traditionally, a very, very closed door industry on financing, and also that in the form of bridging loans and a lot of barriers to entry. Now, what this means for my client, again, all of us in this room could all own or invest in or front the cash for a solar farm, and we can benefit the yield of it. That's a very, very understandable use case. And if we individually believe, or we have like an ESG agenda, we want to save the planet, like we can do that. That's super exciting. Another one of my clients called Decentral, which is an exceptional business model. Again, this is really niche. They work in the entertainment financing industry. So a brand will pay an influencer. The influencer will do a campaign. So Nike will pay, I don't know, or an athlete. These deals take a long time. The money comes in maybe 90 days or 120 days. There's a lot of upfront risk on the brand and on the influencer or the athlete and his team. Now again, what used to be in kind of a closed-door industry, we could all finance that deal, so invoice factoring, and we can also benefit from the yield. So I think in terms of outside of equity, it's going to be use cases like this, and then maybe some like more nerdy ones like I'm not, for example, like card collections, like a rare Pokemon cards, right? Like I don't collect them. I would love to. I think it's super cool. That is also an industry. I think it's one of the fastest growing industries in market cap of collectible cards. I would love to have exposure of that. Imagine being able to have almost like an index or an ETF of these very niche assets, watches, cars, collectibles, green energy credits, and being able to invest in ETF. That's what excites me the most. And then finally, for the liquidity issue, that's a massive problem. Like, I don't know if anybody here has ever tried to buy any kind of RWA asset on chain, but one of the biggest use cases at the moment, which is real estate, the liquidity is a huge issue. It's a massive issue because ultimately, like, you have a property and maybe it has like 50 owners at the moment or 100 owners, which means realistically there's not that much equity share in it. If somebody wants to exit that position, somebody has to be willing to buy that position for them. And at the moment, the only way they can do that is via what is basically like an OTC platform. So that's where it's kind of like a marketplace where you go, okay, I'm bidding for this, I'm selling this. Whereas as we know in crypto, there is deep liquidity for Bitcoin, Ethereum, Solana. We can go to a website, we can swap in. So I think unless somebody can solve like a unified liquidity for a pool of assets, I think that's going to be a really big problem for the niche asset classes.
Great, thank you. And anything to add? Yeah?
Yeah, I think the real-world assets that will have huge traction, let me say, or a huge use case would be treasuries, of course, besides that credits and real estate. Because these are the three asset classes like where people can expect a lot of yield because they're yield-bearing. If we see the biggest DeFi protocol by TVL, it's Aave, $20 billion. And the only reason is that whatever you do there, it bears you some yield. So that's the reason I think any yield-bearing asset will have huge adoption because everybody wants to earn yield, not just investing in something. So treasuries, I think, like will be the most attractive part for a lot of investors to put in money to attract some yield out of it.
Great, thank you. Unfortunately, the time runs very quick, so we are having just 2 minutes. And I would like to make some quick blitz. So my first question, I want you guys to answer in just one sentence. So I'm wondering, what is your favorite existing RWA project?
There is a startup in Dubai called Tribe, which is tokenizing real estate in a really interesting way. That's my most exciting at the moment.
Yeah, I would say invoice financing because no other technology has tackled the problem in invoice financing, and tokenization can.
b-cube.ai, because that's the first one to make it possible to trade with any assets using anything as a collateral. So this solves the liquidity issue of RWAs, which doesn't have much of use cases. So we can collateralize it. Disclosure, I am the founder of the company.
Yeah, I would go for Ondo Finance and Centrifuge. I always go with blue chips because they have the power of attracting capital from TradFi, and perhaps they will be the front runners and winners in the 5 years from now.
It was a quick blitz, and now will be a quicker blitz. You need to answer just in one word. So, biggest opportunity for RWA?
Equity.
Government bonds.
Equity and stocks.
US Treasuries.
Second question, biggest risk for RWA?
Liquidity.
Fraud.
Regulatory.
Incompetence.
Okay, the third question. Year when mass adoption of RWA will start?
2025 this year, for sure. Stable coins, like just go look at the stablecoin market.
2027.
Not an astrologer.
I think 2027 as well.
And the last one, do you believe Georgia can become one of the first countries which will make really great RWA projects, showing the world how it can work?
From what I'm seeing and hearing and meeting people like this, 100%, yeah.
When I saw 3 Bitcoin, Litecoin, ATM machines just outside my hotel, I have to say yes.
I wish it to be so, depending on the regulation, but I feel that other countries are a little bit ahead, like Dubai, for example.
Yeah, I think you get the answer here. I think we have a good chance, and we, the Georgians, have to do our best to do it.
Yeah, I really believe in it. So thank you very much, guys. I hope you enjoyed it. Thank you.
Very much. It was a very interesting panel. All right.